day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 17th of September, 2022, and it's the weekly technical analysis for the euro, the cable, and the Aussie dollar for the third week of September. And let's begin with the euro. Let's expand this, and you'll see that on the Monday there was a significant gap up here at the start of the week and followed through the rest of the day to hit the 102 level round figure. But however, you see the next day on the Tuesday, that was the impact of the US CPI data, which came out still better than expected. So inflation is still running high. And with that, fears of further rate increases this coming week by the FOMC, the Federal Reserve. The major pairs just sold off, massive sell-off and against the US dollar. So we would expect to see the dollar index getting a boost as well. And right through back into the 21 FIB retracement level. So all the way from the 62 FIB retracement, fell 4 retracement levels into these 21 FIB and then settled for the next few days, holding above this rising trend line as support, which was from the end of last month, and eventually climbed back up above the 1 parity level on the Friday. So it recovered somewhat on the Friday to close just above the 1 level. So that was the major news for last week. It was mainly driven by the US CPI data. That was already on Tuesday. Okay. So it did spike through to past the resistance that we had at 101, but then fell back lower. So this 101 will still be a valid resistance zone, along with the 50 FIB retracement. And this is still a support zone from the 99. And as well as the recent swing low. But this rising trend line is going to be a significant support for now. So it's still holding above that level and climbing back above the parity level, trying to climb up further back to the 38 FIB retracement. And this coming week, we have the Federal Reserve's turn with their rate hike decision, which is expected to be a further 75 basis points. This will be the third in a row. And that will push it up to overall rate of 3.25%. So we'll see if they will follow through with that, or whether they'll make a drastic, significant further rate hike of 1%. But I think for now it's still just going to be 0.75. Okay. So let's just take a quick look on the weekly time frame. And yes, there was a big gap up, and then a bearish close for the week with a very wide spinning top. So this is going to be a significant consolidation area between the 62 FIB and the 21 FIB levels, and as well as resistance from the falling 55 EMA that has been also resistive. So it's moving closer into a symmetrical triangle formation. There's still quite a wide range for now. Okay, so we'll need to watch out on Wednesday with the Federal Reserve's decision, and that's going to be significant volatility, and there could be a breakdown. If it does break down with dollar strength, then that's going to be the first support level at the 99, as well as the recent swing low, or actually it's going to be the year's low already. And if that is broken, then it's likely going to target the next round figure at 98. And we may need to turn this Fibonacci around, and if it does extend lower, then let's see how much lower it can go. It's next round figure below the 98, 97. Let's reduce the scale here and use this reversal for the fib. And 138 fib is at above 97. So let's use this for now, for this coming week, with support at the round figure first. This is still going to be the resistance area at the 101. Okay. So we'll use this for now. Then let's switch over and take a look at the DXY to see how that performed. So here's the US dollar index, the DXY, and it's inversely correlated very much to the euro, and you will also see this gap down at the start of the week with the DXY, and continued lower towards the 50 fib retracement level. And then on Tuesday, there was the big boost from the US CPI figure, and it rallied through from the 107.40 area right through all the way to close above the 109.50 area. Very significant bounce there, and rebound, and then consolidated above the 109 for the rest of the week, and even tested the 110 on the Friday before pulling back. So the 110 is the next resistance zone. Let's mark this as well and extend this. Still going to be a resistance area. It's the interim support at the 108 and the 38 fib retracement. And below that, of course, it's going to be the 107, but we'll move it up to 50 fib here with the rising 55 coming up. And that was where it bounced from on Tuesday. Now, if it does continue higher through the resistance, then we'll have to watch out for the next round figure at the 111. That's going to be the next the resistance. above this swing high and high for the year so far. We'll leave the fib as it is. We won't extend it yet. We'll see how it performs and reacts this coming week. With interim support for now at the 109 and resistance at the 110. Years intra-year high at the 110.50 area. Okay. Let's take a look at the weekly time frame, and yes, it's still below the 110, so that's going to be a critical resistance that to break through if it's going to push up higher. So we'll see what happens at the start of the week and before the Wednesday's FOMC rate decision. So it could be some consolidation at the start of the week until the increased volatility comes about around the Fed decision. All right, so let's move back to the other major pairs, and let's move on to the cable. And likewise, at the start of the week, there was a gap up as well and start of the week, and punched through the round figure level of 117 and attempted to reach the previous swing low here at this 100 fib, but could not reach that. And then the US CPI data drove the pound lower as well, right back into the 115 level. So just from just above 117, 200 pips drop back down to the 115, and was still continued on Thursday and Friday to fall into the even lower to below the 162 fib extension into the 113.50 area. So dip below the 114 to test the 113.50 before climbing back up and closing near the 162 fib extension. So this is the reversal setup that we drew from last week, so or a couple of weeks ago, and it did attempt to recover at the start of the week, but then fell all the way through and extended past the 162. Let's see if there's still further bearish momentum this coming week. This is getting very weak for the sterling. And the 200 fib extension is going to be already below 113, so at the 112.20 area. It's very low. And there's a double whammy for the cable this week with the apart from the Federal Reserve, they also have the Bank of England rate decision. So let's see if that's going to help support the weak cable to recover somewhat back above the 115 level. right? And so just right after the Federal Reserve's announcement, then the Bank of England is also expected to increase rate, but not as high as the Federal Reserve. Expected to raise 0.5%, 50 basis points to 2.25%. So let's see whether that's and their commentary, whether they're able to support this weakening sterling here. All right. So critical time for the cable. Let's move on to dollar yen. And let's see here, the the Aussie dollar. Dollar yen will be together with spot gold in my other video. So the Aussie dollar as well being driven lower on Tuesday with the US CPI data after recovering and hitting the 38 Fib retracement area. That's our resistance, along with the daily 55 EMA and the round figure at 69. That was a strong rejection there, drove it back down below this rising trend line and into the support level at the previous intra-year low and below the 67 round figure, but managed to recover on the Friday and climb back up above the trend line. So this is still going to be strong support zone. $68 now is going to be an intermediate resistance. And above that at 69, that's going to be strong resistance now. Okay, let's adjust this rising trend line slightly, and yes, it's just managed to climb back up above that. And this week, the RBA will release their monetary policy meeting minutes on Tuesday, and then that's the key one that will impact the Aussie as well with the Federal Reserve decision. Let's take a look on the weekly time frame, and similarly, bearish close with a wide spin top, upper and lower wicks. So below that, if it does break down lower, and the next below this swing low, could perhaps move this into a reversal setup as well. The swing low to the swing high. And the 138 extension is going to be quite close to the 0.65 round figure. But yeah, it needs to break down below this trend line and the recent support, recent swing low to hit the 66 level first. So let's see whether it's going to hang on and maintain above the 67 area. and this critical support zone. Okay, so we'll see how the US dollar reacts, and that will impact the other major pairs, and especially after the Federal Reserve's announcement and decision. It will impact all the major pairs, and even the stock market as well. Right, stock market fell upon the US CPI data, and indices all retraced lower as an inverse correlation with the US dollar strength. Okay, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.